where $100,000 is just the deposit. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because I want to go through this article from Yahoo Finance discussing the 20 suburbs to invest with a $100,000 deposit, where $100,000 is just the deposit. Now, back in the day, that used to be a substantial portion of a house. I think my parents' house they bought here on the Gold Coast, they got for under 200 grand. Now that I think back, that seems crazy these days. It wasn't that long ago. So does that say that property only goes up? Well, it certainly seems to have government backing. So the top 20 suburbs to invest with a $100,000 deposit. The Aussie real estate market hasn't slowed down just yet, and there are plenty of opportunities for investors looking for a good return. New research commissioned by Aventus Financial has identified the top 20 investment locations in Australia for investors who have saved a $100,000 deposit. The quarterly Aventus Financial 100K investment report analyzes every suburb in Australia to find housing markets that might suit investors who can buy a property valued at up to $1 million. I think I saw someone share a tweet about, put $1 million in a house or in Bitcoin. Or $1 million is like an average house here in Australia. Let's check out some of the asking prices. This is from SQM. This is from all capital cities. Let's do a refresh here, reload so it loads up. And there you go. We can see there, all houses 1.1, 3-bedders 1 million and 73 grand. That's all capital cities, guys. So the point to observe is this change here from when it was around 985. We even go back. Let's go back here to 2010. 10 years ago, 600, 700 grand, all houses. Now, $1 million. 10 years. That's a big climb in just 10 years, everyone. Only housing markets are chosen because freestanding houses are likely to give investors better long-term capital gains than units, the report said. Suburbs have been excluded if the median price for a 3-bedroom house is over $1 million. The share of owner-occupiers is less than 65% or more than 90%. The vacancy rate is 1.5% above, and the yield is 3% or lower, among other variables. Suburbs are then ranked based on the percentage of properties that have sold at a profit. The 20 locations are spread around New South Wales, Victoria, Queensland, South Australia and Tasmania. The cheapest median price is just $460,000, potentially making that suburb accessible for investors with a deposit of 46 grand. Just 460,000, guys. I know there is a spread of audiences here watching it. How many of you got your house for under 400 grand? I was talking to a mate, unit on the Gold Coast, got it for around 600 a few years ago. Now it's worth over 800. Just insane. Here we have, Safety Beach, 765. What? 71.5. That has to be a typo. That definitely has to be a typo. Where are we looking at? So median 3-bedroom price. There you go. Aventus Financial CEO, Alex Viljavskevsky, said that despite all the talk of property prices going through the roof, investors thinking outside the box could still buy a quality investment property in a quality location for a deposit of 100 grand. That's a lot of... that's 90%. Anyway, if you want to put down a 20% deposit on a house close to the centre of a major capital city, you'll need much more than a $100,000 deposit, he said. Well, the thing is, even if you're borrowing at a 90% loan-to-value ratio, only putting down 10% deposit, you want to do that with an investment property if you want to write off the loss. You want to negative gear it. If you're willing to be open-minded about your loan-to-value ratio and location, you can definitely buy a good investment property with a 100 grand deposit. He said if your deposit is less than 20%, you'll likely have to pay LMI, lender's mortgage insurance. LMI may be more than 20 grand, which is a lot of money. But if paying LMI were to allow you to enter the market a couple of years ahead of schedule, it might seem like a bargain if the property were to increase, say, 50% in that time, he said. If you're a first home buyer, you might also be able to qualify for a first home buyer assistance, depending on which state you live in and the rules of your state's scheme. So let's have a bit of a talk about this one, everyone, because you can see here, Look at those prices. Reedy Creek. Okay. $988,000. I know Reedy Creek. I grew up around that part of the Gold Coast. $1 million? I mean, Robina, $901,000. It's all going crazy, guys. Let's talk about this a bit. So I think the one real takeaway from this is it's just emphasizing the obsession we have with property here in Australia. I mean, sure, it could be a good investment. Don't get me wrong. There are a lot of people that have successfully built a good property portfolio. Some have done it quite smartly. And, people that are worried or salivating at the idea of a property collapse and all of these greedy landlords getting done, I think there's a lot of envy there. I think there's a lot of tall poppy syndrome and a lot of jealousy. It seems quite prevalent in Australian culture, and I think that's holding a lot of people back. We don't really lift up the successful, and a lot of people are quite jealous of it. That's something you need to get over. But also, this obsession with property, it kind of hampers our creativity. Why start a business? Why risk an enterprise? Why import goods and start selling when you can just put it in property and you pretty much have the government with your back, guys? It feels like it if we have a look at all of the interventions, all of the support mechanisms that occurred. What do you reckon? Would you put 100 grand in a property now? Are you trying to time the market? Or do you think the big crash is actually going to happen? We'll have to see, guys. One thing that was talked about again and again in the media was the Chinese economy crashing, and it doesn't look like it has. Last year, its growth was 8.1%. I know people go, but you can't believe China, but the market believes it. And that's all that really matters, isn't it? It's all psychology, guys. Anyway, take care, and I'll see you in the next episode of HeiseSays.